Hi, everybody. This is Tim from Trading Strategy Guides. Shandara, I like gold too. Oh, that's great. Yeah, today we're going to look at simple gold trading strategy. So last week our strategy was very gothic, and this week it's kind of shiny and new, right? First, let me make sure everybody can hear me and see the title slide. Let me know in the chat if you can. I've already had lots of coffee, so that's good. Oh, and I got a new microphone too, so hopefully I sound a lot better. There's not much I can do about my voice though, so I promise not to sing. While I'm waiting for your responses, say this. You're listening or watching to the recording of this live webinar, you can speed it up by clicking on the gear icon in the lower right and selecting a faster speed. If you're watching live, well, then you get to ask questions, so that's your trade-off. Shailendra, I apologize in advance for messing up your names if I do that. Ishmael Mirza, I think that's Mark. Good to see you all this morning. So stay around to the end and I'll be sharing a brand new trading maxim, number 49. Hey, Santosh. He Singh from South America. Cool. Kenya. Oh, that's awesome. Good to have all you guys here this morning. Don't forget to click the subscribe button below and click the bell to make sure you get notifications. Let me do just a few trade updates on some of the trades we're looking at. Not just looking at, actually trading. Disney. Disney's pretty close to my stop. My stop's currently at 138.75. I tweeted about that on Monday afternoon or something. So 138.75. I think this is pulled down to within 15 cents or so of that yesterday. We'll see how it goes today. I got $6.18 locked in on this second half, so I'm, definitely not unhappy with that. Bear closed above the descending triangle, and I don't. When it's a descending triangle, I don't take a buy on that. However, it's kind of pushed up to this, kind of making a trading range right here. So let's just see what it does, where it closes today. If it closes and drops, that'll be good, because that'll kind of define this trading range for us. So we'll be able to go long or short out of that. I still would like to take this short. So I am a little concerned about this volume spike yesterday. So the support level is still strong though. So I really would like to see a break of this support level. So anyway, this trade's not totally gone out the window yet. Let's just watch it. Lots of negative news on the euro yesterday and positive US news. I don't know, something about Trump trying to get China to the table or something, negotiation table, which is positive. And so this kind of pushed the euro back down yesterday, the euro USD. I'm still in this. It did not close back inside the wedge, and the wedge is the pattern that we're watching. The whole concept is a retest of the wedge, and it just retested it. So I'm still in this. It's now at 112.06-ish. My entry was at 112.11. My target is 112.69. The stop is 111.24, but if we get a candle close, a daily candle close back inside the wedge here, then I'll be closing that trade. Okay, so this is the big picture of the wedge, so you guys can see that. Okay. All right, let's talk about this gold strategy. You know, I go through the trading strategy guides blog pages and find these strategies in there. And I really like this one, guys. I'll link this below, but basically it's at the Trading Strategy Guides blog. Um, this is something I think that we can do well with on gold. Hang on, my well, good timing. Looks like that battery on my mouse just decided to go dead right then. So anyway, let me get on this. Let me just fix this problem, and then we'll. Yeah, good timing. This couldn't have gone dead like, an hour ago or even 15 minutes ago. All right, we're back in business. Okay, so this is cool. Gold is seasonal. And there are certain times of the year that gold is strong and other times it's weak. This chart right here shows the average monthly return on gold since 1973. So I think this is really cool, and it's above average 6 months out of the year, which you'd kind of expect, of course. But this huge difference is amazing, and these numbers are all averaged over the last 40 plus years. So I'd say these are statistical edges that we need to make profit. So this chart right here puts things into perspective. You can see in January for the last 4 years, not this year, but the last 4 years, there's been a push up, push up, push up, push up. So this is a pretty consistent plan, I think. So here's how we're going to handle that. Step one is we're going to buy gold in the trading months with above average returns. So as you can see, January, February, August, September, November, and December are all positive, all months that are above the average across all the months. So during those months, we're going to buy. And we're going to buy early in the month because basically what this says is the amount of gain on gold from January 1st to January 31st, or from February 1st to February 28th or 29th or whatever, and so on. So what we want to do is we want to buy early in these months, or we want to sell early in the other months. Okay. So for the purposes of this explanation, we're just going to go back to January 2018 for the example. Okay. So imagine this chart is live, okay? And we're sitting here in late December, which is right in here. Let me draw some lines, make it a little easier to see. Late December, which is right in here. Wow, it'd be great if I could draw a straight line, wouldn't it? Sorry, this dead mouse kind of messed with my brain a little bit, you guys. So what we're going to do is we're going to start by pulling a Fibonacci on the latest swing from low to high before this particular date. Okay. So if we're looking at this live, we're sitting here in late 2017 or early 2018, and the latest, since we're heading into January, we're going to look for a buy opportunity. So we're going to pull a Fibonacci on the prior, the most recent swing from low to high. Now, I'm going to talk a little bit more about Fibonacci's when we get through talking about this strategy. I'm going to show you the strategy and assume that you understand Fibonacci's for now. So those who do understand it won't have to sit through an explanation of how the Fibonacci works and so on. But I will get into more detail about how the Fibonacci works and how you'll use it later on. Okay. So the strategy as it's written in the blog says that we're going to look for the 61.8% level or the 0.618 Fibonacci level. I think that that if prices push through that, you might want to consider additional levels. So there's a 78.6 Fibonacci level, and so on, all the way down to the 100% or the 1.0 Fibonacci level. So for the purposes of explaining this particular example, I'm going to use the 61.8% Fibonacci level, but this, I think if this were to push down through other Fibonacci levels before the beginning of the year, then I would consider using those as my support levels. Okay. The idea is that you want to find a significant retracement from this high before you enter this trade. Okay. Clear out my chicken scratches there. Okay. So the resistance level we're looking at for this example is 61.8 or 0.618 on the Fibonacci tool. And what we want to do then is after the first of the year, we want to see where price is with respect to that 61.8. So this is where you have to be a little bit flexible, okay? Because the market is the market, and the market, you hear me say this all the time if you've been around a little while, the market does what it wants. It's not going to cooperate with us. It's going to do what it does. So we have to be the ones cooperating, okay? So January 1st may roll around and price could be down in here or way up in here, okay? And we have to be flexible with how we look at this. But the point is, if it's pushed through this 61.8 level, then what we want to do is see if it's trading at or near that 61.8. And if it's above 61.8, I would say buy it. Okay, after the first, buy it. If it's above 61.8, maybe if in the last few days of December, buy it. If the first of the year rolls around and it's below 61.8, but not below, say, 78.6, then I would wait for a close above the 61.8 and buy it. Okay. Santosh, yeah, yes, I would say if it pushes through the, let's say that it pushed through the 78.6 level, for instance. I would treat the 78.6 level as the support level that we're talking about here in this example. Okay. Let's say it pushed through the 100% retracement. I would consider that level. Okay. So essentially, whichever level that it pushed through is the one that I would use for this strategy. Now, the blog just talks about the 61.8, but like I say, you have to be flexible with the market because, this is not always going to look exactly the same. Um, Patterns are patterns because patterns are typically based on emotions. So, you guys have seen me. I love trading ranges, consolidations, continuation triangles, ascending and descending triangles, those sorts of things. They're all based on emotions. And this also is based on emotions. Okay. But what you've got is every single time that pattern forms, you've got a different group of traders forming it with different wants and fears and greed levels and all those sorts of things. So the pattern is never going to be exact. Pattern is never going to be perfect. Okay. So you have to look past perfection. And I'm not OCD, but I'm very, on the edge of it. I like things decent and in order. And that was a real problem for me when I started trading because I was looking for price to exactly touch lines and not push through and not quite reach them and that sort of thing. I was looking for perfect pattern designs and the every candle pattern had to be exact, and that was something that took me a little while to get past. So you'll see me draw lines and I'll draw them right through candles or above candles or whatever. But basically what I'm saying is I'm drawing a line in the sand. I'm saying this is the line that I'm going to trade. This line is not perfect. And you'll also hear me say a line is never just a line, it's always a zone. So always keep these things in mind as you trade. And that's the reason why you want to be flexible about these levels. Um, the examples that I give, the examples that are in the Trading Strategy Guides blog are just that. They're examples that you have to um, be willing to flex with. And that's one of the reasons why I do these live webinars is so that I can help you understand what is being flexible and what is being crazy. Okay. And for example, I've had people ask me, well, how wide is the zone when a line is not a line, it's a zone? Well, how wide is it? Is it 5 pips wide? Well, you know what? There is no answer to that question. When you draw a line, you look at all the candles and you kind of average between the candle closes, the candle opens, the candle highs, the candle lows, that kind of thing. So, it's a very big judgment call, and my judgment call may be different than yours, and that's okay. That doesn't mean yours is wrong because mine is mine and yours is yours. You understand? As my son, I quote my son a lot. He says, "You do you, boo." Um, that's what makes trading such a personal thing. Okay. So sometimes a zone is 5 pips wide and sometimes it's 20 pips wide, and it depends on exactly what it is you're looking at. Okay. There are 1,000 ways to draw trend lines. All of them are right. I know, isn't that just absolutely crazy? Basically, what you're saying is I'm drawing a line in the sand, and this is the line in the sand for this example, but this line in the sand for this particular trade could be the 78.6 level. It could be the 100% level or whatever. Okay. So, also, I will come back and catch all your questions. If you wouldn't mind, if you put a little context in your question in the chat, like maybe just a couple of words about what it was we were looking at the time. That'll make it easier for me to answer. In any case, basically, if this is not above this support level at at the beginning of January, in this case, then you'll wait for it to close above that support level. If it's already above it, I would just jump into it. Okay. Okay, the next step is your stop loss. I think I saw somebody mention stop loss on the way back. Yes, I'm all about the stop losses. I like stop losses. I use stop losses. Most of the time, I use hard stop losses. And it's mostly because I don't want to have to stare at charts all the time. And a hard stop loss keeps me from having to do that. I feel like I've got to sit here and watch price if I don't have a hard stop loss in. So put your stop loss below this swing low. How far below it? Well, that again depends on you. Um, I have a tendency to like to use the ATR, the average true range, uh, for stops and targets. Um, if you're looking at a daily chart, which this happens to be, then you don't want, you probably don't want your stop just 5 pips under there, because price on a daily chart can easily push 5 pips below, because that's where the market makers know where the stops are. So they're going to be looking for them there. And if they can push price 5 pips below the prior low and take out some stops, they'll do that. So, I don't know what the answer to that is, though. I would probably likely make it a percentage of the ATR. So if the ATR is, on a uh, forex pair is, say, 50 pips, I might want to have my stop at 25% of that or something, below the swing low. I mean, so, you know, 10, 15 pips below the swing low. Um, the truth is, every one of my trades, my stop is 1.5 times the ATR below the entry. So I would most likely do that in this case as well. So I like that. If you want more details about that, check out the trade management video from a few weeks ago. I'll link it below this video. Give me an hour or two after this webinar to put all that information underneath the video. Okay, but the plan here is get your stop loss below that swing low. The next step is to take your profits before the end of February, because you remember January and February were both up months. Now, the truth of the matter is, I think I would consider taking profit at the end of January. And the reason is because February is also an up month, which means that it is pushing up, and it may not be pushing up all the way uh, from January through February. There may be some pullback in the middle there. So in this case, there was a bit of pullback. But I would at least get a portion of it off toward the end of January. And as I've said lots of times, my first target is usually one ATR, one daily ATR. But we're looking at a longer term trade here, so I might actually increase that to a weekly or a monthly ATR for a first target. But the idea here is the entry and taking advantage of the seasonal swing in gold. Okay. And of course, on the other months, the ones that are not above average, the below average months, you can reverse this and measure a swing low and enter a sell trade. If you do this each month, I think you can probably get a pretty good annual return on gold. Okay. Anybody have any questions yet? Oh, I see a lot of comments. Hang on. Let's see. Uh, so yeah, the mouse is looks like it's pulling back down. So we'll see how that goes. Mark, I don't think you missed anything. I saw your chat come up, and I don't think you missed anything. The video will be posted. I think the video posts almost immediately when we finish. So, Santosh, can you buy at 786? I think you asked that before I said that, but yes, yeah, the 786 level or the 100% retracement. Raymond, yes, I'm always a firm believer in stop losses. Your comment was the one that I saw about stop loss. Chris, yeah, typically a month. If you, I think you want to trail stops during the course of that month. I wouldn't want to let a trade go up, 1,000 pips and then drop down before the end of the month and end up negative or something. So during the course of the month, I would anytime price did a swing low or a swing high, uh, I would uh, I would consider putting my stop. So as for this example right here, this pulled back and then pushed back up. As soon as this broke this high, I would move my stop up. Whoops. I would move my stop up just below this swing low right here. Let me get my drawing tool out here. See, price pulled back here and then pushed back. As soon as it broke above here, I would pull my stop up to this level, and then I would do the same here. As soon as it broke above this high right here, I would pull my stop up to this level, and it never actually pulls above this high, so the stop will always be right here. So it likely will take us out right here. Okay, in this case. Okay, Renus, Holland, very cool. You guys got a lot of great music coming out of Holland. Some of my favorite bands are Dutch. Let's see. Uh, Chris, I use ATR 14, I think. I use the default in TradingView. So we'll look at TradingView in a minute, and I think it's 14. But if you take the ATR and adjust it, but anywhere from about 8 to about 25 or 30, it's pretty darn close. All you really end up doing is smoothing it out, I think. Uh, Mark, let's see. I've noticed that like Forex, 2 times bull candles rejected by 2 times bearish candles. The bearish trend line gives a great continuation signal. Very cool. Very cool. I'll have to think that through and take a look at it. Appreciate that. Let's see. Yudha. Um, Truthfully, I have not looked at today's gold. The FOMC, yeah, the FOMC shakes things up a lot. For those of you who don't know, that happens once a month on Wednesday, and that's when the Federal Open Market Commission in the U.S., who decides things like interest rates and such, they have announcements on the FOMC day. typically 2 o'clock New York time on a Wednesday. So that is happening today. Is that right? Um, it's kind of funny. I used to keep track of all those news events, but since I've been trading daily charts, I don't have that much. I don't pay that much attention to them because, in the grand scheme of things, they usually don't have a huge effect on longer term daily patterns that I like to look at. Now, when I do daily Forex trades, I do look at what's coming up over the next day or so. But that's just so I don't, get into the hole immediately as I enter the trade. So, Chris, gold options, I would say yeah. I would say yeah. This strategy, I think, can probably be done with options. I know Casey does that a lot on a lot of my trades. I think he uses options to trade a lot of the uh, trade suggestions I do on my videos. So, thanks, Bill. Interest rate decision this afternoon. Yeah, that's could definitely shake things up. Um, so I'm not sure that I would enter uh, much of anything between now and then. I would definitely wait until after that. Okay, let's take a look at the charts and how the Fibonacci works. Okay, yeah, I'm using a 14 period ATR, and that's the default on I believe that's the default on TradingView. I really like TradingView. I used to trade Forex exclusively, and I of course used MT4 like so many others. And I love MT4, and I'm an MT4 programmer, MT5 programmer. But I am really falling in love with TradingView. And, when you're a programmer, switching to a new language is not a huge deal. But I haven't even looked at Pine yet, which is a programming language in TradingView. But let's look at the Fibonacci tool. First of all, if you look at the toolbar over on the left, the Fibonacci retracement tool is not usually on top like this. It is here because I was using it. But you see this little arrow right next to it. If you click on that arrow, you'll get a list of the GAN and the Fibo tools and that sort of thing. Okay. So you can trace down till you find Fib retracement right here. Now, if you click the star over here on the right on any of these, it will appear in your favorites toolbar. This is my favorites toolbar. You can turn the favorites toolbar off down here in the lower left just by clicking on that. So you can move that out of your way. I usually just keep it right up here. When I look at TradingView on one of my devices, either a tablet or a phone, this toolbar gets in the way. So I do shut it off there, which shuts it off here as well. I like TradingView in that the TradingView app on my phone and tablets and things is identical to this. It picks up all my lines. It picks up all my settings and everything. So my settings are consistent across all my devices. And that's one of the things I love the best about this. MetaTrader, I have the MetaTrader app and I can look at the trades and all, but the charts don't have any of my tools or any of my lines on them. I have to draw separate lines on those charts. So TradingView is really nice. Plus, I do trade with Owanda, and Owanda trades can be taken right here on TradingView. So that's nice too. I used to use Owanda's FX. I can't remember their desktop app, and it's a little bit, it's a Java based tool, so it's a little bit lame. But But I really like Awanda, so I put up with that. And of course, you can use MetaTrader with Awanda as well if you don't mind trading uh, uh, micros. If you're trading with Awanda so that you can trade tiny size, you need to use TradingView for that. So, and I've said this about Awanda. I have used Awanda for, at least 10 years, probably more like 12 or 13. I've never had any trouble getting money in or out of Awanda. I've never had any trouble with bad trade situations. They're always quick to respond to customer service issues. And, I sound like I'm a salesman for them. I'm not. I don't have any kind of affiliate arrangement with them or anything. But the downside, of course, is that I've got to use U.S. trade rules. So that's the 50 to 1 is the best leverage I can get at Awanda. But I like it for trading small accounts because you can trade as small as 1 unit of currency with it. So if you're trading, if you're new and you want to start out with a $50 account, you can actually maintain your risk by trading with Awanda. So there you go. That's my sales pitch on Awanda for the day. All right, let's talk about Fibos. Uh, Here's my Fibo tool right here. You just click on that. You click on the swing low. If you're looking to buy, you click down at the bottom and then click up at the top. And this will show you what this does is it calculates the Fibonacci levels from this swing high. Now, what the Fibo tool is designed to do is measure retracements. Okay, so I have pulled the Fibonacci tool for this whole swing high, and you can see that this has retraced back to about the 38.2% level. Okay, you'll hear us say a lot of times that the market's got to breathe, and if you get like a big bar, you can expect a 50% retracement or whatever. The Fibo tool will allow you to say, well, and it's after the fact, of course, but it does give you an idea of the strength of a price movement. In this case, it only retraced 38% before it pushed up and made a new high. That means this is a pretty dang strong move right here. Okay. But these levels are like lines in the sand that you can draw and say, okay, I'm going to buy at this level in anticipation of a reversal. Those of you who have been in my trading room in the past, you may remember that when I traded the Asia session, and this has been a lot of years ago, we had a little trade strategy that we did every night called the Asia Mirror. And what we did was we pulled a Fibonacci from the high of the day to the low of the day, or vice versa, depending on which way the day was, the New York session. And then we put positions at the 38% retracement, the 50%, and the 61.8% retracement. And then we went home for the night. And what we expected was that during the course of the Asia session and the time just ahead of the London session, that price would retrace back to those levels and pick up our trades and then go back in the direction of the prior day. And that was a pretty successful trade strategy that we used for quite a long time. That's an example of how you want to use the Fibonacci tool. Okay. So another thing that people like to do with the Fibonacci tool is use what they call Fibonacci clusters. So a Fibonacci cluster is done by drawing Fibonacci's from every swing high to every swing low. Yeah, this gets pretty complex after a while. You keep adding to these like so. And what you find out eventually is that you will find places where these lines cluster. Now remember, a line is never just a line, it's always a zone. So here's a cluster, here's a close cluster right here, these two. Here's another one. Anytime you get a confluence of two or more of these lines, you can think there's going to be a bunch of traders that are going to try to reverse the direction at these levels. So those are levels you can trade. If you want to look a little bit, these three are pretty close together right here. So you could put a position somewhere in here and put your stop below this cluster right here. And put your stop down in here somewhere. So if price reverses at this cluster, you're in the trade. If price reverses at this cluster, you're also in the trade. Okay? Those are just some ideas how to use the Fibos. Experiment with them. And just like I've said countless times, back test, forward test, test the living daylights out of your strategy. You find a strategy, and if you're a new trader, I recommend you take a strategy that's already fairly proven strategy, and Trading Strategy Guides has a bunch of them. Take a fairly proven strategy and test it. And you're not testing it to find out if it works. You're testing it to prove to yourself that it works, so that you won't be switching strategies every 5 minutes because you take 1 or 2 losses on it. Sometimes you'll take a string of losses on one strategy, but if you've got a good solid strategy that's been proven and that you've proven to yourself, you're going to have confidence to continue trading that even during a slow time or a string of losses. Okay. All right. Let's see. Why not use the gold futures chart? Mostly because I just had this chart already up on my charts when I was looking at it. Gold futures are great too. I like to use I like to use futures. I used to trade index futures all the time, which is why I have the index futures always on my list here. I think I explained my green list and my red list in a video. My green list are items that, this is actually my overall watch list, but I have my green list and my red list. My red list is for pairs that we're either trading or we've got potential patterns already formed that I'm watching. And the green list is for pairs that I'm watching for for some reason, usually because of some kind of news that's on them. I'm looking for patterns to form on those. So, and then of course the orange list is mostly forex pairs, and then I have these lists. These are all the cryptos that I look at, and these are the forex pairs that I look at. There should be about 30 forex pairs in there. Okay. Anybody have any questions about anything? Doesn't have to be about this strategy. I mean, don't ask me, what's the meaning of life or anything, but because I'm going to say something nerdy, geeky like 42. Which is, designed to solidify my nerd cred, my geek cred. Okay. If not, for right now, let's move on to our brand new trading maxim today. I like this time. Someone asked me a few weeks ago what a maxim is. You know, it never occurred to me, and it probably should have, that some of you guys might not know. I know we have a lot of followers here that are not natural English speakers, so I try not to get too deep into the English language here. Um, so I should have explained this from the start, but I started explaining it in my videos, and I'll explain it here too. According to the dictionary, a maxim is a general truth, a fundamental principle, or a rule of conduct, or sometimes just a proverbial saying. Some of my maxims I use just to keep me focused during my trading. Others are just motivational quotes that I find useful in general. I think some of you may know that I uh, am a fitness guy, and I use these maxims to help me in my fitness as well as in my trading. So, and other areas in my life. So I like to read a lot. I read a lot of books and internet posts and cat videos. Now, really, I like cats, but I'm just joking when I mention cat videos all the time. It's actually dog videos that I watch. Now, seriously, most of the maxims come from my reading, or they're suggested to me by friends or coaches or other acquaintances. I'll add a new maxim to my list whenever I find something that fits me. So I hope they help you as well. I suggest that you start your own list of maxims to help in your trading, to help in your life. Um, you know, uh, everything, all these things are personal, and the quotes that help me may not really help you. Um, but, feel free to borrow from my list anytime. I hope to put them into an ebook someday. Casey wants me to, and I've just been too slack to do it, I guess. Um, and as I've mentioned, I've gone through most of these maxims at this point, but every now and then, you know, we'll have a brand new one like today. Today, number 49. Success seems to be connected with action. Successful people keep moving. They make mistakes, but they don't quit. This is from Conrad Hilton. Conrad Hilton was more than just Paris Hilton's great grandfather. He's the founder of the Hilton Hotels chain. I saw he was born in San Antonio, and I thought, whoa, a Texas boy. And I found out, no, he was born in San Antonio in the New Mexico territory in the late 19th century, before it was New Mexico. And he passed in 1979 at the age of 91. In any case, successful people don't stand still, they keep moving, and they don't quit just because they screw something up. I have to keep remembering this myself. Having been an entrepreneur most of my life, I've definitely had my share of failures. Something I learned early on is don't bother spending time crying in your beer. When you experience a failure, it's time to move on to the next thing. Okay. Okay. Let's see. Checking for some more questions. What is a pip? Besides a backing to Gladys Knight. That's great. Myron, you're awesome, man. A pip, price in point. That is the smallest, well, theoretically, the smallest measurement in price movement for a currency pair. It would be equivalent to a tick in a um, stock. But pip currency pairs now, they measured in tenths of pips or points. Uh, so, Chris, Whitford, the cats and cucumbers. That's great. uh, Bill, I like to use fibs to gauge how tiered a trend is. Deep retracement may mean the trend was really tired and could reverse. Not enough energy to continue. Absolutely. That was awesome, Bill. Yes, this 100%, you guys. A deep retracement in a trend is definitely a signal that the trend is slowing. So watch that sort of things. closely. Hey, Casey. Casey is my favorite person in the history of people ever. Do I get a raise now, Casey? Casey is my trading coach and my mentor, and he and I have been friends for like 10 years now. So thanks for your comments, bud. Uh, you don't what didn't you get? I missed something. I know some of my humor is obscure. I apologize for anybody that doesn't get it. I get it from my son. My son is weird. Right. He gets it from me. Milland, target on gold. I haven't really, like I say, I haven't really looked at gold. I mean, I looked at it, I looked for a pattern and didn't find one. So I haven't really given any thought. I don't think about targets on these until I have actually, I'm about to enter a trade or I'm watching a trade strategy, something to set up. So if I actually enter a gold trade, I'll post it in on Twitter. I'll post my Twitter below this if you guys want to follow me. Um, if I see a good pattern forming, I like to trade breakouts from consolidations, triangles. Triangles are my thing. I think we're gonna do live training on this next week on the triangle strategy that I like so much. So we'll talk about that sort of thing. Oh, Casey, yeah, the Gladys Knight and the Pips. Gladys Knight um, was the head, and her background vocalists were called the Pips. So, Duran, I don't. I, I'm sorry. I wish I could. I wish I could tell you. I don't have a strategy for entry today on gold because I typically look for consolidations. So also, I would wait to find out what happens at FOMC this afternoon before I did anything with gold for sure. Gold, as you may know, is a safe haven. Um, it's a place where people run when they're worried about fiat currencies and what fiat currencies are going to do. And I had a discussion about this with a friend the other day. Um, Robin, hi Robin, if you're here today. Uh, he and I were talking about whether blockchain based cryptocurrencies may end up being a safe haven because they're not based on, theoretically, not based on uh, government controls and that sort of thing. So that's another thing to think about. Uh, Bill, yes, let me put my email address in here. Tim Black at Trading Strategy Guides. Aids.com. Alicia, um, I I have kind of covered that in a few videos in the past. I'll link those below for you. I will be covering that in detail next week. Where I find um, my stocks to trade, or where I find my markets to trade, how I find patterns to trade, what patterns I like the best, and how I handle the trade after I find it and enter it and so on. I typically trade from daily charts because I have focus issues, so I can't sit and stare at charts. I have a friend that I used to trade with who can stare at a chart for 18 or 20 hours a day. I mean, without blinking. I'm sure he blinks, but it seems like he doesn't because he he'd watch 1 minute charts and he'd be in and out in a flash and making money hand over fist. And I would just, I'd be looking at cat videos or something. That's where the cat video joke comes in. No, I'd be focusing on something else, and I would totally miss the entry or totally miss the exit or whatever. So I like trading daily because I only have to look at them, uh, 30 minutes a day or so. So lazy, I guess. Yeah, I hope he blinks or has some kind of windshield wiper things on it or something. Yeah, yeah, I'm sure he blinks some. So, uh, okay. Anybody else have any questions or comments? Or you want to tell me I'm ugly and my mama dresses me funny or something? Uh, all right, here's the strategy. We're going to buy gold in the trading months that it's above average return. We're going to wait until gold retraces to the 61.8% or other Fibonacci level um, from the previous market swing. We're going to buy at support or on the way up as we break above that resistance level. We're going to place our protective stop below the last swing low. And then we're going to take profits before the end of the month and trail the stop loss below each swing low. Hi, Ed. I am so glad you're here, bud. Um, there are a bunch of strategies at Trading Strategy Guides blog. I'll be linking that below this video and the other videos on this channel. I do analysis videos Monday and Friday where I talk about the different trades that I'm doing and how I find them and so on and so forth. And then on Wednesdays at 9 a.m. New York time, we do this training, and I usually talk about a trading strategy or some other trading item and answer questions and so on. So welcome. We're glad you're here. Make sure you click the subscribe below and hit the bell and you'll get notifications. Malind, gold is almost near the 1360 resistance on the weekly chart, and it's been tested 5 times. What's now? Again, I say I haven't looked at the gold chart, but if it has tested that level 5 times, then it's likely to bounce from there. But who knows? You know, um, I will take a look at gold and post about that if I see any kind of great strategy to get into it. Ed, typically the videos come out. I don't do them live. I record those videos, and they typically come out sometime in the late afternoon on Monday and Friday. Sometimes earlier. Depends on how quickly I find something that's a great trade setup. Oh, you're welcome. You're welcome. Okay, here's another cool thing. I just want to make sure you guys know about this. Trading Strategy Guides has this Strike Trader Elite trade signals service, and I think they have one based on the EFC strategy now too, if I'm not mistaken. They'll send you out Forex trade signals on a dozen or so pairs on several different time frames, all of them based on the Strike Trader Elite and EFC systems. Look below the video here in a couple of hours for a link to the free signals that use the Telegraph application. I'll also post a link to my video that explains the Strike Trader Elite system, and we'll also have videos shortly that explain the EFC system as well. Duran, I don't use Elliott Wave. I think it's probably really, really good, but every time I've looked at it, my eyes have glazed over because it seems very complex. And it could be that I'm just satisfied with the strategies that I'm using and not really looking for something new. But every time I've looked at Elliott Wave, and I don't think there's anything wrong with it because I know a lot of Elliott Wave traders that are really good. But every time I've tried to decipher it, it's kind of put me to sleep or made me, switch over to cat videos or dog videos. Um, but anyway, yeah, I'm not definitely not an Elliott Wave trader. Any other questions, you guys? Okay, we're going to do this again next week. We put out a uh, what do you call that thing when you ask people questions and they give you answers? Anyway, we put one of those out, and it seems like you guys like these live trainings as well as the analysis videos. So we're going to keep doing both of them. Okay, at least for the time being. So come back here 9 a.m. on Wednesdays. Uh, that's U.S. Eastern time for these webinars, and then watch for the analysis videos on Monday and Friday afternoons. If you click the subscribe button below and click the bell, it will notify you when there are new ones coming out. Okay. So, yes, Chris, I am live right this minute. Of course, if you are watching a recording of this, I will not be live. It is right now, it is 10 o'clock, just a few minutes after 10 a.m. New York time. So, thank you. Thank you for watching. Thank you for subscribing. Chris, if it's midnight there, then I guess you must be in, wow, you must be in Australia somewhere, perhaps. Okay, you guys, if this webinar helped you, please hit the thumbs up below. And thank you for helping us make this the best trading channel on the internet. You guys have a great remainder of your week, and I will see you next time.